I'd like to welcome everyone. We've got a nice crowd out there, and I want to thank everyone for taking time out of their lunch break, and it'll be well worth it. I want to introduce the team from Foundry Commercial. They've been longtime sponsors of FEI. If you've been to our clay sporting event, you see they've got the sponsor table to strive for there. Today we have Jimmy, Tim, Katie, and Jace with a combined 90 years of experience in the real estate market, and the minimum is 16. So they must have stuck, a couple of 100-year-old people in there from that. When you're looking for real estate in the Tampa Bay area and even nationally, they can really handle anything they can throw that you can throw at them. And believe me, these past 2 years, I've thrown a lot of stuff at them, and look at them. They're still standing. Let's see, I'm checking the video. All of them are smiling. So that's good. And they've trained me very well over the years. They always say, don't wait to the last minute. And so at least I give them a month ahead of time before we need to do anything. But no, the real is they like 18 months to 2 years before you need to do something on the real estate side. We've got a very exciting topic today with the commercial real estate market here in Tampa Bay. I also want to remind everyone that we will have polling questions during the presentation, and no one's keeping score for there, but we just need you to answer them to get credit for your CPE. And again, without further ado, the great team from Foundry Commercial. And thank you all for participating and for hosting today's event.
Well, great. Thank you so much, Steve. And yeah, we've had the distinct pleasure of working with Steve and his group for quite a few years now, and it's really been our pleasure. We sure appreciate it. As Steve said, I'm Tim Kilkelly with Foundry Commercial. Joining me is Jimmy Johnson, Katie Trott, and Jace Reaver. So welcome everyone to the FEI Commercial Real Estate Market Update. We appreciate your time today, and we hope that you will find it interesting and informative and useful at some point in the near future. Just a broad stroke, the overall commercial market has been performing extremely well up to the COVID pandemic. And even some sectors have been performing well even during this global pandemic that we're in. So in this discussion and update, we will focus on three main sectors. The first being the commercial office space sector. Then we'll move into the industrial space. And then finally, we'll hit on the retail space. And then if time does permit, we'll have a Q&A at the end. So without further ado, let's jump right into the commercial office space. Jimmy, Katie?
Thanks, Tim. The office market is first up, and generally speaking, over the last several years, it's been a landlord's market in the office sector. Over the last few years, rents have been on the increase. Lease terms have gotten longer. Landlords have been less flexible, but as we know, markets change, and the market is currently changing. The market's changes are underway currently as we speak. So, Jason, we'll go to slide 3. We'll take a look at where we've been and where we're headed. And there's clearly an impact from two different factors. First is COVID, and the second is new construction. Now, bear with me as we walk through these two charts, and trust me, we're not going to bombard you guys with a bunch of charts and graphs and data. This is one page, we got another page, but this does give us a really good snapshot of where we have been and where we're headed. On the left side, you'll see going back to 2014, year after year, positive space absorption. And that's shown by the orange bars. So that goes from 2014 through 2019, and along with that strong absorption has accompanied increase in rents. And so landlords have really been enjoying higher occupancies, increased rents, higher property values as a result. And on the right-hand side, you see the green line that is showing the downward trend on our vacancy rate, starting from 2014, trending down to around the time of COVID and when some new construction is starting to open up, as we'll talk about in a little while. You'll notice too on the vacancy rate that it's starting to trend up just a little bit in 2020 and beyond, but which is a good thing for the tenants because it frees up more space, rental rates flatten out, if not drop a little bit, lease terms get a little bit more flexible. But there's not a big oversupply in the market as we've seen in previous cycles that have had a substantial negative impact on the market. Now, of course, these are, the go forward forecast is simply a projection by some, great minds in the real estate industry, but, based on trends that we've seen, this is really what we expect on a go forward basis. So with that said, let's take a look at some of the new office developments that are coming online. We've selected 4 new office developments to share with you guys in this presentation. One of the office developments is actually located at Tampa International Airport. The other one, called Midtown, is located at the intersection of Del Mabry and I-275. And the other 2 are located near downtown. So as we take a little bit deeper dive into each of these projects, we'll start with Water Street. Tampa's received a significant amount of national news over the last few years, which is in large part due to a fair amount of construction activity we have in our market, but also to related to the job growth, the quality of life, and all those things that makes living and working on the west coast of Florida great. Tampa's also been mentioned in the same breath as Nashville and Austin, which is pretty cool to be able to be considered in those same circles because those are obviously neat cities. Some of the more exciting projects we have here are like the Water Street project, where Jeff Vinnick and his SPP real estate development company have tied up a lot of land in the downtown Channelside area, and they really have a big large-scale project underway. Water Street, Tampa, the actual address is 1001 Water Street. This building is actually under construction. So it's not just being talked about, it's not just on the drawing board, it's actually under construction. As a matter of fact, they just topped it out. This is the first new office building in the Tampa Central Business District in the last 25 years. So this is very noteworthy. Great project, 400,000 square feet. It'll be completed toward the end of next year. Rents here are going to be the highest that we've seen in Tampa Bay, but it is new construction. It is high-rise construction. There is a large-scale project around it, so probably warrants some of the higher rents. Immediately adjacent to this building is the new USF College of Medicine building, and then across the street from this, the Water Street office building, are 2 high-rise apartment buildings going up. One's 26 stories. One's 21 stories. They have 400 units. The ground floor will be a Greenwise grocery store, and those will be completed in 2021 as well. So the Water Street project is a very exciting project and one that we're all keeping our eyes on.
Midtown is another exciting project in Tampa Bay, and this truly connects the downtown submarket and the West Shore submarket. Right now, there's really nothing in between, and I'm sure most people on this call have driven by this project. If you're on 275 at the Dale Mabry exit, you can see a 22-acre site that has been assembled over several decades, actually. And just recently, the Bromley company who assembled this project brought in Highwoods, the largest landlord in the Tampa Bay market, to be their development partner. So they are under construction with a 200,000 square foot office building. Original expectations for fourth quarter 21 delivery, but they actually are probably ahead of schedule and maybe delivering in the second quarter. One of the big things that was of note in the early stages is that Whole Foods is going to be moving over here from across the street at Walters Crossing. So that was a big win for them. They also have two very nice hotels that are under construction. One is the Aloft and one is the Element at Weston. So, you know, very legitimate, nice hotels that will be right there. They also have high-end apartment buildings going up. So this, along with 3 of the 4 that we're going to talk about, have the live, work, play. And that's really what these new landlords and new development is focused on. They want you to go and work there and live there and have lots of options for your grocery store and your retail, your fun, your dining experiences. So again, this is a really exciting project in Tampa Bay.
Thanks, Katie. Moving over towards the airport, we're going to talk a little bit about Sky Center 1. And Sky Center 1 is the new office building being constructed right as you get into the airport. You see it on the right-hand side next to the rental car facility. And this building, it really has some unique features. Probably the biggest and the first feature to talk about is the Skywalk that connects it to the Sky Tram, which gives you immediate access to the airport and to the car rental facility. And because of that connectivity, it gives you access to all the amenities that the Tampa International Airport has, the P.F. Chang's, the Hard Rock, you know, let alone if you travel, just getting to the airport, or if you need to rent a car, you could do that directly from your office. So really neat addition to this new project. And as most of these buildings and all the new buildings that are being constructed in markets like Tampa and Austin and Nashville, they all include some sort of LEED certification and really a focus on technology and amenities. And all these projects are exactly the same. They're all looking at LEED certifications and the amenities. The land under this building is actually still owned by Tampa International Airport, but they did bring in a private developer to develop the building. But TIA is going to occupy several floors of this building, but there'll be about 4 or 5 floors left for occupancy from outside tenants. And as Katie mentioned earlier, and Jimmy mentioned, that rental rates have ticked up, and this is no different. You know, we're projecting this to be in the mid to upper 40s a foot on the rental rates. So it's going to be an expensive building, but really good building and one to keep your eye on.
Heights Union is, this is the new development next to Armature Works, and it's part of a 50-acre development that was formerly industrial land in a pretty rough part of town. So it's unbelievable to go and sit at Armature Works or Eulalie and see what has come of this area. You know, it was not somewhere you would want to be hanging out not too long ago. There are 2 sister buildings, each 150,000 square feet. Both of them are under construction. One of the buildings is full. The other still has about 50. They have 75,000 square feet today with a lease out on 25,000 square feet. And WeWork is actually the largest tenant that has already signed in that building. So that's definitely going to be an interesting thing to watch. Obviously, they've been in the news quite a bit over the past few years of some of their financial issues. We've been told that they are still moving forward with the build out of their space, but you know, TBD on that. It is an unbelievable area, as I mentioned. In addition to Armature Works, they also have several other restaurants. They have event space. They do have a hotel planned, and they have a high-end apartment building that's already existing. And again, it's a very bustling, different area that has transformed all the neighborhoods around it. So that's exciting. And Denise, I think that's where we have our first question. right, looks like everybody did pretty good on that.
Would that be considered a layup?
We only said it 5 times. Chase, can you move to the next slide probably, or are we? Okay, great.
X out of this, Denise.
Yeah, we can X out of that. Okay, here are some notable leases in the marketplace. Prior to COVID, Tampa was really a bustling marketplace. And as you can see from the slide, there was a lot of big deals. Some of these are renewals, but a lot of these are new deals. T-Mobile was one of the larger deals in the market, and that was an interesting deal because they were in a multi-story office building on multiple floors, and they wanted to be on one floor, which is not a very easy thing to do for 140,000 square feet. That is a very large space. So we were lucky enough to be involved in that deal and moved T-Mobile to Net Park. Looking at this slide, for me, probably the most exciting thing is Fisher Investments leased 74,000 square feet at Tampa Bay Park. They recently announced that they're going to be bringing 600 jobs to the Tampa Bay market. So that was a huge win for the Economic Development Council and Tampa Bay as a whole. This was their first East Coast operation, and that is a lot of high-paying jobs that they're bringing here. Industrious is another one that sticks out to me. I mentioned WeWork earlier, and they obviously have been in the news, but Industrious is a competitor to WeWork and a co-working location, and they have signed 3 deals over the past year or so, and one of them was actually post-COVID. So that's definitely an interesting thing that we're all watching. Amgen, that was a group that brought 400 jobs to the Tampa Bay area, again, also high-paying in 2017. They recently announced a 33,000 square foot expansion, and that was announced post-COVID. It was literally 2 or 3 weeks after this all began that their announcement came out. So that was a really good sign that we were happy and relieved to hear. Another deal that's not listed on here is another one that our team was lucky enough to be involved in, and due to NDAs, we don't have it up here, but it was a government contractor that originally was looking for 40 to 60,000 square feet, and we ended up putting them in 147,000 square feet due to social distancing. So they needed to send their employees back to the office versus sending people at home or sending people home, and they pretty much over tripled in the size requirement that they needed due to social distancing. Oh, and one other deal I do want to mention, there was actually another deal that was just announced today, and it's a law firm that signed 39,000 square feet at the Heights Union office building that I had just mentioned, which is a pretty exciting thing for them.
So I think we have question number 2.
Yep, question number 2.
At least one person chose Bernie Madoff.
John Hill, I bet that was you. Our troublemaker.
Denise, do I X out of that or do you?
If it doesn't go away automatically, just click it closed.
All right, Jason, the next slide.
Yeah, let's go to the next slide. So we can talk about some opportunities in the market as we see it on the office side. As we've mentioned a couple of times, it's just really been a landlord's market over the last couple of years, and rents have gone up and vacancy rates have gone down, and landlords have driven rental rates higher and lease terms longer, and it was just a supply and demand thing. But due to a recent change of events with COVID and space coming back on the market, and then with new buildings that are under construction, that pendulum thankfully is now starting to swing a little bit more back in the tenant's favor, so that there'll be a little bit more flexibility that the tenants can enjoy on their leases. So what we wanted to do was share with you guys some opportunities in the office sector that we're seeing We've selected a couple in Pinellas and several in Hillsborough County that we wanted to highlight. So we can take a little bit deeper dive into those. The first one we wanted to talk about was Roosevelt Corporate Center over in St. Petersburg. Some of you may remember this as being the original Danka headquarters building. 4 stories, almost 170,000 square feet. When Danka moved out of the building, Bankers Insurance in St. Petersburg backfilled 2 floors, and then Galen College of Nursing took down a floor. So it was full for many years. But as of recently, Galen has moved out of the building and into their own freestanding building, and Bankers has substantially downsized. So that there's almost 170,000 square feet available in that building. One of the really interesting things about this project is that it's owned by W.P. Carey, and right next to this 4-story building was a 1-story, 50,000 square foot building that W.P. Carey had a hard time leasing. So they actually demolished that building to turn it into parking. Their thinking was, let's really increase the parking ratio so that maybe we can capture some bigger tenants in the 4-story building. Well, fast forward to COVID, which really came shortly after that building was demolished. We're now seeing companies not necessarily want to have that kind of density that would drive that kind of high parking ratio. So we'll see if that was a good decision or not over time, but that's one of the opportunities in Pinellas County that we've been watching. Also in Pinellas is over in the Bay Vista Office Park is the Vology space. They put 60,000 square feet on the market for sublease. Bay Vista is located immediately west of the St. Pete Clearwater Airport on Roosevelt Boulevard. And the Vology building is a beautiful 3-story red brick and glass building, and the Vology space has just been built out. It's a beautiful space. They're looking at handling their workplace differently, and as a result, they've put a big block of space available on the market for sublease. And then also in Bay Vista, there are 2 other single-story buildings that are available. One is 75,000 square feet, and the other is 25,000 square feet. And through COVID, what we've been seeing is that a lot of companies are not loving the multi-story buildings because they would rather their employees not have to go through a common lobby or ride elevators with people, or maybe have more means of ingress and egress in and out of the building. So we're really seeing companies have a keen interest in these single-story buildings. As a matter of fact, Katie mentioned a moment ago some of the more noticeable leases with T-Mobile and with the other government contractor that we work with. They both sought out single-story buildings as well. And so we're just seeing a real desire for companies these days to get out of the multi-story buildings and go into the single-story buildings.
Moving over to Hillsborough County, Nielsen Media has a large presence over in the Oldsmar area, which is an area that's very desired because it's right between the Pinellas, it's on the line pretty much of Hillsborough and Pinellas County. And so there's not a lot of office space out there. So it is a very highly desirable area, again, that has not been overbuilt with office space. Nielsen, pre-COVID, had decided that they were going to downsize and has freed up 107,000 square feet in one of their buildings, 3 floors, each 35,000 square feet each about. And they actually just announced this week that they're going to be laying off 3,500 people globally. This is a beautiful building, relatively new. It has a high parking ratio, and it, again, is a great opportunity for a company coming in and wanting a campus type feeling. It's a large block of space in this Tampa Bay market. And then we've got Woodland Corporate Center, which is off the Veterans Expressway off of Waters Avenue. And Cognizant recently vacated this space, and you may have read about it in the paper. It's kind of an interesting study. They built out a 43,000 square foot space, barely occupied it, and Cognizant made the decision to walk away from their contracts with Facebook and other social media because these people were reviewing the content. And you know, if you look into it in the paper or online, you know, there's lawsuits for PTSD of what these people were reviewing. And so Cognizant said, you know, we're walking away from very, very large contracts. So again, this is a 43,000 square foot space, barely built out, barely even touched. I toured both the Nielsen and the Woodland Corporate Center space recently with a client, and they're both move-in ready. Woodland Corporate Center, it is on the 1 story, which is a very sought after thing. As Jimmy had mentioned, we're seeing a lot of activity in the 1 and 2 story office buildings in the suburban submarkets, so that companies do not have to deal with the elevators and common corridors. So it's absolutely beautiful space, and I think we're going to be seeing more of this as time goes by.
Yeah, so these are just 4 different opportunities that are interesting, that are somewhat unique based on what's going on with the buildings and the tenants. But in addition to these, we're tracking probably another 24 subleases in the market of varying sizes and lease terms and economics. And we expect potentially more subleases to be coming on the market over the next 30 to 60 days as companies continue to try to figure out what they're going to look like on a go-forward basis. So that's it for office opportunities. We thought we would share with you also some of the hot topics as we're seeing it, as we talk to different companies, the things that are on the minds of decision makers today. Our discussion today is very different than it would have been 3 or 4 months ago. COVID is changing the market dramatically, as we've all seen, on really a day-by-day basis. And the full picture probably won't be real clear to us for some time. But we've seen all companies really be affected by it. And what we've seen is that companies often fall into 3 broad categories. First category that we see is companies that are, they're putting their space on the market for sublease. Some of these subleases we've talked about, some of the subleases that we're tracking, they're just giving back space because they just don't think they're going to need it. The second category that companies fall into are the companies that are spreading out. As Katie mentioned, the company that originally thought they wanted somewhere between 40,000 and 60,000 feet, and we ended up leasing almost 150,000 feet, just because they literally needed to put more distance, physical distance between their employees. And then the third category, which is a big category, is the category of companies, they just don't know what the future is. They're trying to figure it out, to make big estate decisions because the permanent nature of real estate, and they're just working hard to figure it out. And we'll just continue to walk through that and see how that plays out. The other topic right now is just returning to workplace. How's it going to look? Many companies have decided that working from home is working pretty well. That could be several different factors that may be temporary or that may be permanent, but it seems to be working well for some companies. And so they're letting some of their people continue to work from home. Other companies are saying, this really doesn't work for us based on the industry we're in or the kind of company we are or the size of company. It's not working. So you have 2 competing, contradicting factors there in those decisions, and it's difficult, and it's difficult from not only the kind of company or the size of company, but are you in Tampa? Are you in Miami? Are you in Dallas? Just, what is going on in your local community? So it's difficult, and we'll talk more about that as we get into the industrial sector as well. One last thing that I would mention is that we do have a number of landlords who have said, yeah, on the office side of things, we're really collecting a pretty high percentage of our rent. So not a real problem there, but a little bit concerned as these PPP dollars burn off, how that's going to play out over the next 60 to 120 days.
Another thing that's been a big deal, as I've mentioned several times, is that co-working space. It may not seem like that big of a deal, but WeWork was planning on taking over the world. They were planning on leasing 2 to 3% of every market that they entered, and they were well on their way to doing that in Tampa. They had signed several leases and were about to sign several others before they announced, their financial troubles became official. So they are definitely on everybody's radar. And then, as I had mentioned earlier, Industrious has signed 3 deals recently, one post-COVID. And there are so many others, mom and pop co-working locations that have opened over the past few years. That was the future of office space, as people were saying. But you know, it's definitely a little bit more complicated now in the post-COVID world. So all eyes are on them. And then the last bullet point, if COVID was not enough to deal with, it is an election year, and every time you turn on the news, it's something else. You know, I mean, gosh, murder hornets, Sahara death storms. So it's a matter of what's next. You know, business decision makers of businesses really have their hands full of what to do and what's going to come next.
So that's a wrap from the office side of things. We'll transition now over into the industrial market.
Yeah, thanks, guys. So the national industrial market has been very, very active over the past few years, and Central Florida has really been a major contributor to that activity. Jason, you want to go to the chart? We promise this is the second of two charts, so we won't spend a lot of time on it, but it's a very similar chart with similar results as the previous office chart, but this one's for industrial. And you'll see, you know, in 08 and 09, we had a downturn, and the vacancy rate really spiked. Rental rates came down. Landlords were giving a lot of concessions. But as you see in 2014, that green line, which indicates the vacancy in the Tampa Bay and I-4 corridor, the vacancy rate really has been on a sharp decline ever since 2014, which resulted in rental rates really coming up and landlords not giving concessions. And you'll see there's a little bit of a blip up, but even now it's still steady, right under 5 or right at 5%. Central Florida, we've been a clear leader in that decline. As you see, we actually beat the United States vacancy for most of the time period. And the I-4 corridor, which is the bulk of our industrial market, has really flourished from strong job growth and strong population growth. And Florida is key on population growth. So as you see it go into 2020, 2021, 22, we do go up a little bit, but it really never gets above 6%, which tells us that, that's still very, very low vacancy rate, which means the rental rates are still going to continue to either hold flat, or if they decline, it'll be very low and it'll be very short-lived. Unfortunately, whereas office, I think it may be trending towards a tenant-driven market, the industrial paint's a little bit different of a story. I think it'll loosen up a little bit, but it's not going to be long-lived. And most of that is due to the e-commerce division. That the e-commerce is just leasing up everything that they can get a hold of. So unless we have a huge increase in supply and demand tapers off a little bit, we're gonna continue to see this trend. Jimmy?
Yeah, and it doesn't seem like demand is tapering off in the industrial sector. We'll get into that in a minute. There is new supply coming online, which we'll talk now about some of the new industrial developments that are underway. And there is a lot of industrial development underway. Most of it is in the I-4 corridor from Tampa all the way over to Orlando. A lot going on in the Lakeland and Plant City areas. We've selected 4 different new developments to talk about, one in Pinellas, one in East Tampa, and then 2 more in the Plant City, Lakeland area. There's a lot more than this going on, but this will give everyone a good flavor for what's going on in the industrial market.
Yeah, so the first opportunity that we'd like to highlight, our new development, is the Lakeside and Lakeside Logistics. This is a speculative development, 505,000 square foot cross dock facility, and it just delivered in the second quarter of 2020. It's located off of I-4 at Plant City, which is very close to both Orlando and Tampa regions. So it hits a big consumer region by itself. This spec development really speaks to the confidence that investors have in this I-4 corridor and the continued growth and appetite for new product. These big DCs are becoming more and more common as our population grows and we continue to consume more products. And you'll see in this video right now that in Florida, because of our climate and because of our low insulation requirements, they're able to actually just pour these concrete walls on site and tilt them. Hence the term tilt wall construction. So what you're seeing there is called tilt wall construction. And it really limits the time and cost of building these facilities, trying to keep the cost down so that we can keep rental rates low, although we have seen them tick up quite a bit in this corridor. But that's the overview on Lakeside Logistics, and it's a large project with a lot more land to be able to build more of those facilities.
Yeah, so the Pinellas County project that we're highlighting is the Landings Golf Club, and this is over in Clearwater near the Clearwater Airport, just west of 19, west of Belcher. And Pinellas County being the most densely populated county in the state of Florida, there's not a lot of big land parcels left anymore. So this 57-acre site represents actually one of the largest land parcels in the entire county. So a local developer has been negotiating with the city to get a long-term ground lease on the golf course for the development of industrial space. There's a real lack of good industrial space in the county overall. So the city council voted recently to move the process to a voter referendum, and that will happen in November. And assuming that goes through, then there will be a fair amount of rezoning that has to occur. So this project should happen. There is a need for good industrial product, especially in northern Pinellas County. And it's one that we're all keeping our eyes on. It's not something that's going to happen fast because it's a city ground lease. There's a lot of approvals. There's rezoning that has to occur, but it's a good use for that piece of land. The other project that we wanted to mention in I-4 is the Mango I-4 Logistics Center. This is a 300,000 square foot warehouse distribution center that's under development in Seffner out on Interstate 4. It's at the intersection on Interstate 4 where Lazy Days RV is. So you got Lazy Days out there, the Rooms to Go warehouse distribution center, the Gator Ford and Armwood High School. It's that exit. It's exit 10 right off the interstate. This is a great project. It's well under construction. It should be completed in September of this year, so a few months out. It's owned by USAA Real Estate, and it's being developed by US Capital Development. It's a state-of-the-art Class A tilt wall construction. Like Tim was explaining the tilt wall construction at Lakeside, this is a similar tilt wall construction building as well. This building is what we call a rear load, so the trucks load from the back of the building, whereas like the Lakeside project that Tim previously talked about is what we call cross dock, where there's loading on both sides of the building. Well, this is a rear load, with the theory being that office space would be across the front of the building. This project, as I mentioned, is 300,000 square feet. It's got 36-foot high clear height in the building for stacking, 300 car parking spaces, which is a generous parking ratio for a building of that size, and it's in a great location. As I mentioned, it'll be ready in September. If it's not leased by the time it's ready, it'll be leased shortly thereafter. There's just that much demand in the I-4 corridor, and it'll probably go to just one tenant and not two or more.
And lastly, although there are several new developments out in the I-4 corridor, we picked this one. It's called Drag Strip Logistics Center. And this is just over 700,000 square foot cross dock distribution center. Really in that area, there are several, and we're seeing anywhere from 500,000 to 1 million square foot distribution centers being built out there. Rumors on this building are already stirring that, you know, a very household name e-commerce company is going to be signing a lease on this, likely to be Amazon. So I think that if that lease is not already signed, it's on the way to be signed. So this building just delivered, or it is delivering in the next month or two, and it will already have a lease on it, which is not uncommon. And this area in itself is just home to a lot of household names that we all deal with every day. You know, Amazon, Pepsi, Best Buy, Haverty's, the list goes on and on. And you know, speaking of big names, why don't we move into some noteworthy leases that have been signed?
Well, Tim,
but
we have a
first-
question.
Yeah, but first let's do a question. Thanks, Katie.
Chase, we can probably move on while people are still answering that.
Yeah, so we thought we would share some noteworthy industrial leases that have been signed. Very, very exciting last year or even longer for the industrial world. You know, as we said before, the I-4 corridor had received a lot of national attention as an industrial powerhouse. So when you look at this list, the one that pops out the most is Amazon. They have by far been the leader and the most active group in leasing space along the I-4 corridor. They've signed multiple leases over the last couple of years, totaling several million square feet. But you know, not to overshadow the other names like Home Depot, they've done multiple leases on over 1 million square feet. Real exciting for Brandon and East Tampa that Coca-Cola just closed on a land site that they're going to be building a new campus on that is going to house production, distribution, and office space. HCA Healthcare signed an over 700,000 square foot lease, as well as Ace Hardware signed a 700,000 square foot lease. And rumor has it that's just for their e-commerce division. So the 400,000 square foot space that they occupy in East Tampa is probably going to remain doing what it's doing. And this is all new. So those will be all new jobs to the market, which is incredible to think of. But and as you look at this list, these are some really, really big names, but by far the most active group in this list has been Amazon for signing leases. Jace, if you want to go to the next slide, I think we have another question. Yes, we do.
Okay.
Nope.
Is that right, Tim? Was it Amazon?
That's right. That's right.
So that was a snapshot of some of the more notable industrial leases, transactions in the market. And as we did with the office opportunities, we wanted to share with you some of the industrial opportunities that we're seeing. We have talked about how active the I-4 corridor is, and two of the properties that we'll talk about are in the I-4 corridor. But there's also a unique opportunity in South Tampa, down on Gandy Boulevard, which is the Macy's DC. Jace, if you'll go to the next slide, you know, as we said, the office market is starting to shift from a landlord market to give the tenants a few more choices. The pendulum swinging a bit towards the tenant's favor, which is a good thing. but it's still in the landlord market or in the industrial market, it's still a landlord's market. There's just a lot of leasing velocity going on, particularly in the e-commerce sector right now. But there is product coming online. So it's not necessarily that there's a lack of supply. It's just the supply that's coming online is at new construction costs, which are typically a little bit higher lease rate to support the value of the new construction. So we wanted to walk through a handful of industrial opportunities, keeping in mind because it is industrial, it could all change by 5 o'clock today because that market's moving pretty fast. But with that said, Tim, you want to roll us through the Macy's project?
Yeah, and keeping an eye on time, we'll probably have to run through this a little bit quicker so we can get through the rest of the presentation. But the first one is the Macy's DC. You know, our region has been dominated by the I-4 corridor, but we thought this was a really interesting project. You know, Macy's, as they've struggled, they put some of their real estate assets on the market for sale, and this is a 680,000 square foot distribution center that was built on 40 acres back in the 60s that they've occupied since. And a lot of activity on this. You know, they're wanting to sell it, and we've seen e-commerce for last mile distribution centers really interested in it, but we've also seen multifamily.
Something's wrong with Donald Trump.
Hey, Denise.
We've also seen multifamily folks really interested, as well as mixed use. So again, to try to keep this moving along, that's all I'll say about that. But that'll be interesting to see what happens on that site. Let's see. You want to do Massaro there?
Yeah, 1820 Massaro Boulevard is a 410,000 square foot building, and 350,000 of that is going to be coming available at the end of the year, which this is going to be the biggest block of space available in the East Tampa submarket. It's cross dock and just a really great space. So they're also going to have a lot of activity. There's room for outside storage, and which is not a common thing at all in the industrial world, and has great ownership. So again, we see a lot of activity going on in this building.
Yeah, and the good point on the ownership, because the same owners have the 6422 Harney Road building, which some of you on the call may remember that as the old cash and carry distribution center off Harney Road. And the reason that we brought this up is because of its freezer cooler space. There is a drastic shortage of freezer cooler space in Central Florida and across the country. With you know, the growth of groceries, there's just been a huge demand for this, and the average age of freezer cooler buildings across the country is more than 35 years old. So a lot of it has just antiquated equipment, antiquated clear heights, column spacing, docks. So what this owner did is they went in and really renovated all the infrastructure of this building so that it can compete with newer projects. The new projects can cost anywhere from $175 to $300 per square foot. So they have a distinct advantage versus those because they can offer it at a lower lease rate. So it just finished with the renovations. My hunch is this will be leased very, very soon, and it'll be leased 100%. With that, on the sale leasebacks there, Jimmy.
Yeah, the last opportunity we wanted to highlight was a sale leaseback, and it's not a property specific opportunity, but it's an opportunity for owner occupants of industrial properties to unlock value with their buildings. Investors right now are clamoring for industrial sale leaseback properties. It's kind of the hot product type in the investment world, and now's a good time for companies to unlock the value that they have in their industrial facilities that they own. All of the industrial REITs like Blackstone and Link, ILPT, WP Carey, and others, as well as private investors, are paying very aggressive yields right now for industrial properties. You know, a sale leaseback allows the seller to unlock a significant amount of liquidity potentially and structure lease terms that work best for the company. This is an extremely active market across the country right now, and a lot of companies, large and small, that own their own industrial facilities are really taking a hard look at this.
Jason, if you want to go to the next topic, we'll roll through these really quick because I do want to get to some retail information. COVID has had a distinct impact on industrial, a little different than office and retail, where it's actually probably promoted e-commerce, which we'll get to in a minute. But so yeah, COVID has definitely had effects on the industrial world. On the returning to workplace, most industrial was considered essential. So most of the production areas had to stay up, most of the distribution centers had to stay running. So they didn't see a whole lot of exiting. There were a handful of automakers and large pork producers that did have events that they had to shut down and then re-enter the workplace. But other than that, because of the essential nature of this industry, most of it was up and running the whole time. As far as e-commerce, e-commerce has drastically increased, and that has put a big strain on industrial real estate. Some forecasters say that e-commerce alone will have a demand of over 1 billion square feet in the next few years, which is just incredible to think of. And then lastly, manufacturing. What the COVID day did was it exposed our lack of domestic manufacturing of health products, of penicillin, of just products in general. So I think there's going to be a big push to bring those back homeland, at least a percentage of them, to bring back homeland and not be so reliant upon outside countries for our core manufacturing. I know that was pretty quick, but I would like to get to some of the other later retail markets.
Yeah, we'll take a few minutes here and go through retail. We'll compress it down a little bit to respect everyone's time. I know we're getting close to needing to wrap this up, but there were a few things that we did want to mention in the retail world. Obviously, in the retail world, man, how things have changed. It's just been crazy. Retail real estate has obviously been hit hardest by COVID, and it's going to take a while to recover, both for the landlords and the tenants. I mean, you've all seen these household names on the screen that are struggling currently, and the list obviously is much longer than that. We thought it was interesting to actually take a look at West Shore Plaza, which is one of the larger shopping malls over in the West Shore area in Tampa. They originally had a plan to redevelop in phase 1 and phase 2 some of the land that fronts West Shore Boulevard, and you can see phase 1 was going to have 600 residential units, a hotel, office, medical office, and then phase 2 was going to have more residential as well. But when you look at the aerial and you see the anchor tenants at West Shore, whether it's JCPenney's or AMC or Macy's or Sears, those 4 companies are really having a hard time right now. You have Dick's Sporting Goods, which is hanging in there pretty well, but with Macy's, AMC, JCPenney, and Sears, I think there's a good chance that overall redevelopment plan may hit a little bit larger scale as we get a little bit more clarity on what future development opportunities and financing looks like. And then if we click over to International Plaza, it likewise has some interesting things going on.
Yeah, International Plaza, I would say it's a little bit better than West Shore Mall. I mean, if you went through West Shore Mall right now, I mean, you couldn't list a company that was not struggling. But things that stick out to me here are Neiman Marcus and Lifetime Fitness. Obviously, those are 2 of the anchor tenants and struggling. I would say probably the most interesting thing about this is that a merger between Simon Properties, which is one of the largest mall operators in the country, actually decided not to go forward with purchase of this mall. There was a $3.6 billion merger that fell apart post-COVID just because of the concerns about what is going to be happening in the retail world. They recently scrapped plans to build a movie theater and also add a bowling alley, which would have been fantastic, but understandable that that's not exactly where the world is going. So I think that's the quick thing, and we have one more question left. I think that that ends our presentation. All of the above, yeah, there we go.
Oh,
All right, cheat. Tim, do you want to end, say goodbye?
yeah. So so I know we kind of sped up there at the end, but we sure appreciate the opportunity to talk to you all, and we we see you guys at, well, we were seeing you guys at all the events and the clay shoots and all the other things, and we sure hope we get back to that time soon. And in the meantime, yeah, if anyone has any questions, we'd be happy to answer. I think once everyone answered that last and final question, it was no time.
There's enough.
Well, again, Denise, thanks for the opportunity. Everyone on the call, thank you so much. And by all means, if you need anything from us, please feel free to reach out directly to us, and we'll get you whatever you need.
Stay safe.
Thank you, guys. Take
Thank
care.
you so much, everybody.
Thanks,
Bye-bye.
Denise. Thanks, guys.
Bye.